Okay guys, good morning. We'll be starting at 8 o'clock in 6 minutes. I'm going to go ahead and get the chart set up for today. A couple of areas, we just got to pull a couple things out of our hat to make stuff better. Alright, so first of all, let's go put in the, as you can see, we've continued on that whole one-timing thing, right, to the upside. Oh, and before I get started, since I'm doing this on YouTube, let's see here. I need to put this up real quick. There you go, guys on YouTube. This is just for fun. Right? Educational purposes only. Past performance is not indicative of future results. All that good stuff. Okay, you can read that all you like. Okay, let's fix up the levels here. So we're going to turn right click. This is getting pretty rote, but up, low. It didn't save that. Let's do that again. Back a little bit. Right click. Plenty of areas below. If we ever dip again, feels like we won't, right? Right click. We'll change this to, I don't know, purple, just to let us know that's the trap to the prior day. This goes away. Orange, orange, green, green. Let's see what else we have. Single prints again, no shock. Oops. Purple, okay, and purple. Right click. Okay, obviously fair pricing, yada yada yada. We're hung up at the top there, and we'll see what it does. Look, there's not a lot of point in going through all the there's not a lot of point in going through all the little details of where support and resistance are, and this is the reason why. When we roll over, finally, let me see if I can find this here. The 5, like, it'll take a minute to load, and I'll come back to this chart. But what's going to happen on the first down day when the market goes straight up like this? So if you think about what makes markets and good support resistance, right? So there's, I don't know how to draw this, right? So let me see if I can figure this out. And if I can do it on a visual, let me let this chart finish loading first. Here, I'll do it on another chart. Here, I'll do it on this. So look, the way the market usually works is that, okay, there's multiple classes of traders, right? There's day traders. We have the smallest tolerance for losses, right? Then there's swing traders. Then you go up to retail traders, then institutional investors, right? And larger guys, right? So obviously, the guys that hold sway over the market are the ones that control the institutional dollars. I mean, really in a big way, those are the guys that control it. They're at the top, right? So let's say market's going up, right? Market goes up, and you end up with, when the market comes down, you get a buyer, then the market goes up some more, and market comes down, because most of those institutional guys are buying on weakness, right? Then the market goes up, market comes down, and you get this jigsaw of support and resistance, so that as you come back to it, inside some of those areas, you obviously had sellers, so you end up with trapped sellers, and you also end up with responsive buyers, right? In both these situations. Okay. in in this circumstance, this is what we've had over the last couple of days. Uh, uh, and no retest, no backside test. So the first thing that happens when this occurs is that no one's sold because no one's had to, right? Like, who's sold in this entire leg up, right? So in each of these moves, in order to go lower, right, you've had on a larger scale, I'm not talking about intraday, you've just had sellers as this thing has, you've had no sellers as this thing goes along, right? So that means two things. First of all you end up with is buyers. Once you get underneath it, all you end up with is buyers getting trapped. And that leads to big, strong breaks. Why? Because the buyers will defend, but sellers are the ones that will really defend. Why? If I shorted over here and it moved all the way against me, man, I'm going to cover when it gets in here and be like, thank you, Lord. I don't care what your time frame is. No one shorts with the idea that it's going to move significantly higher above them. So when it comes back to, even on the institutional level, you think these guys are sophisticated, but they're not. They're not that sophisticated. Now I'm going to show that to you, what that looks like. Where did this load up? Here. Let's go find it. First we got to squeeze this chart up. Okay, so let's see if we can find it. I found the last time we kind of went vertical. Okay, here's a minor example, except it's vertical off the bottom, right? See how we go up, up, and up? And then when they finally long liquidate it, see how it didn't dip back into here? So if you look as we're coming down, this is where the last sellers are trapped, right? So see how it went? It went straight up. There was really not much negotiation on the way down. So it came down, the original dip buyers bought it, but then when it broke, it just long liquidates. If you look at that day, right, so that's 10-3. That's kind of what you can expect on the first nasty day. And here's the cruel thing about it. We've been doing this for a couple of weeks now, right? So guys who are momentum traders, guys who are dip traders, right, they're going to look at this one day, right? So that's why I'm so cautious on the open drive lower at the open, which, by the way, I'll cover in a minute. I was wrong about the open drive lower, but that's all right. I'm human. I'm allowed to make some mistakes, as Bill put it yesterday. But that's what it looks like. When you look up on top, it's worse. Okay, see here? We had it to the right. So see when we extend up, 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 there's no sellers left behind, right? So see when we get over here, so this is the day we broke. So we can learn from it just by looking at it. First of all, it got above the prior day's high, right? That looks like it was a Fed day because it was right in the middle of the day. But that's the long liquidation. We got underneath the prior day's low, into single prints, found responsive buyers. It was the next day that was really the problem, right? Now, if you look at each of these days, see how there's just no response. It's why I'm paranoid when we're extended so far. This is a big rollover. This is from 15,680 all the way down to 15,240, right? Now, if you look at it and go, well, of course it was short, right? But when you look at it from the prior days, look how many days. This was the last down day. 1, 2, 3, 4, 5, 6. Every dip buyer in this process goes, well, I'm just making money. Why shouldn't I keep buying the dip, right? And even over here, they were really okay. This is the Fed day. You can see the break on the Fed day. They had to be, I'm going to guess, but I'm going to say that was a Fed day or it was a midday break. There's not much else that accounts for a 1 o'clock break, right? Let's see, 9:30, 10:30, 11:30, 12:30, 12, 1. That has to be the Fed, okay? But this next day where they're buying, right? So here's what happens. Let's take, and it happens a lot, right? I'll have someone who's good at trading momentum in the room, and they'll make money on all these days, probably in their Apex accounts. It happens more to people who are in Apex accounts than it does to people that are in their own account. And here's what happens. By the time I get over here, I'm like, okay, guys, it's been up. You know, we're pretty extended, and I get cautious on the longs, right? Probably wrongfully so, but I get cautious on the longs. And they go, so then what happens is, because I'm leading the room, well, Simon got cautious here, and he was wrong, and even over here he was wrong. So he goes, he must be wrong over here too, right? And this one day, not this day, because no one's going to get caught on the Fed, right? Not in our room. But on this day, they get wiped. And they give all these days of great P&L. I know there's people in the room listening right now that this has happened to. They give it all back over here. Not only that, right? So they have a bad day over here, but then they come back and they go, oh, look, if I bought the dip, we're back to normal, right? We're back to normal. I bought the dip, we're good. So now what happens to them? They're still all right even over here, right? See how we gap down and you're like, boom. And then all of a sudden we get into this. Boom. Boom. This wasn't that long ago, right? Where all of a sudden buying the dips become much, much, much more challenging. So it's fine to be biased long over here. There's zero wrong with that. There's zero wrong with being biased long over here. What is wrong is not recognizing that, hey, this moved up so quickly that there's nothing underneath it that's been re-auctioned and checked up upon, so it can slip very, very fast to the downside. Now, here's the flip side of that story. Someone comes in and goes, hey, it's short, and they nail this short day after day, right? And they go, it's short, I'm going to make a ton of money. You start moving to the right. And I want you to understand, the same psychology that made you all this money over here, I'm looking for shorts, I'm pressing my shorts, I'm doing great. Notice how many days it lasts now. 1, 2, 3, 4, 5, 6, 7. We'll count this as 8, right? Then 9, 10, 11 days. You look at it and you go, man, I've just been killing it short for 2 weeks, right? And you don't have a sense within you, and it's hard, right? It's really hard. You don't have a sense within you to go, this can't last. As a matter of fact, your brain does something worse to you. Your brain goes, I'm on easy street, and this is going to last forever. It's not you. It's not me. There's not a person in this room that hasn't happened to, because this straight down is just as addictive as the straight up, what we're in right now, right? Only the bear porn, for some reason, whatever, in human psychology, people buy the bear porn more than they buy the bull porn. I don't know why. Okay? So all it takes in this, I can tell you right now, hope, 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 destroyed. Most of the time, if you look back, all the money someone made in this roll down, they lost in this roll up. Now here's the difference. If you take this as a whole and you look at these charts, okay, the market spends the majority of the time, even intraday on these down, rotating back up, okay? But what the down very, very rarely does, I'm going to say that again, what the down very, very rarely does is this right here, where it extends for 3 months in a row straight up. Usually down, even in the strongest of bear markets, someone can, if I'm wrong about this, Ed, Bill, anyone who's been around Randy for a long time, please correct me on this, okay? What happens here is, to me, because I like to short, so I don't, right? Or at least I keep it very small now, is that you go, well, what you're looking for is this, right? This seesaw over here. And your brain doesn't account for, we can just go on a 3 or 4 month rip in one direction, right? It's what happened. So this move right here, this prolonged March to July, March straight up, it wasn't violent. It took days, there was consolidation periods in there, and you could trade both sides. What happened in this particular case, when you go forward, if you look at this, is that entire move that we're experiencing right there. Well, my computer's not wanting to respond. Let's give it a second. Does this whenever I... And let's see what else I can close down. Oh, that should do it, right? So, here, let's go in. Don't do that. Let's go down. Doesn't want to do that either. Let's see why not. Is that where we're at right now? Nope. It just doesn't want to go to the end. There we go. So this little rip right here, if you look at the space that it's covered since this low, right? So here, let me show you on length here. Oh, you're just not liking me right now. Ah, there we go. Thank you. Stop. Bring it in. Okay, this length that we've covered in approximately a month and a couple of days is this. There we go. A little bit higher, I think we're over here somewhere, right? I don't know why this is forcing this to roll so slowly. It just does not like the number of days I've loaded. Copy and move. Okay, that we covered approximately from the 15th, 10:15 to 12:15. Wow, it's just not happy with the amount of stuff I'm making it do. Here we go. Let's try this one more time. Ooh, it doesn't like this. It's using a lot of resources. Okay. Anyways, this was very, very quick to the upside is what I'm trying to point out. And I'm just drawing lines all over the place. If you look, this little move right here from 3.6 to 4.15 the first month, and then the month and a half this was much larger and much faster and much more violent. Okay, and then here's the other part of the deal, right? See this here? Everyone assumes, including me, that we need to pull back. I say we need to pull back, but really when you look at the history of the market, right, without putting fundamental understanding behind it, because everyone's fundamental understanding can be cover a wide area of scope, right? This really looks like this right here. Like really what we're looking for is this, but this could be the potential for first leg of a breakout. If we get this part right over here, the market's going to end up somewhere up over here, right? So here's the problem, right? Up multiple days in a row, and then there's another category that's going on here that people don't understand, and that is and this causes constant, what's the word I'm looking for? Friction, right? So what I am not looking for is for the market to go down or the market to go up, but the speed at which the market goes down and the market goes up and the number of rotations that it does, right? No one would like it if the market simply closed here and opened here, right? That would suck. Why? No one could get in, right? We'd all be out. Well, as a day trader, right? Let me change this chart back so I can adjust this. Hold on a second here. Data limiting. It clearly did not like the number of days I've had to load into this. Does not like this. F5. Chart. Wow. I haven't seen my machine slow down like this. Chart settings. We'll just unstop its frustration. There we go. Okay, so I want to circle one more time. The rotations have been small and minor, right? We can't trade underneath any prior day's low. Every short that I've seen has been destroyed in this. I don't know anyone who's a professional short or an amateur short that can survive this type of rotation back up, right? And then lastly, as Ed sent to me this morning, what did Ed send? It was pretty interesting. This guy Tom goes, he sent to me, he goes, Tom, Bears win battles, Bulls win wars, right? So shorting's fun. I don't have any problem with it. But I want to let you know that the first few down days can be pretty vicious. And this puts us in a bit of a precarious position because of the straight up and the number of days. But really what's putting us, or me, in a difficult position is the lack of speed and the rotations down. I'd be fine if it went up another 1,000 points if we could just get some good 60, 70 point intraday rotations down. And that's coming, right? That's the next stage. So here's my suggestion. Write down. Bear markets, great bear markets tend to last for 2 weeks. Bad bear markets tend to last for 3 or 4 days. Okay? 2 weeks, 3 or 4 days. Okay, if you want a great example of a great bear market, December 15th to January 3rd of last year. You should take it, pin it up. That's what a great bear market looks like. Look what happened afterwards, right? Look what happened afterwards. The long side is easier to work. You need dips, right? And then the last thing I want to address, and particularly for the room, right? So I got into a conflict with someone in the room. After talking to several people, if I can work out something with this person, they're welcome to come back in, right? As observers, right? As an observer and to trade. But there's one thing I can't have in the room, and I think I need to address this for everybody. The goal of the room is to keep everyone as close to profitable as I humanly can. I do not run this room as a business in and of itself, right? It is a business. I do charge. There's no question about it, right? But I don't run the business. I don't run this as a business. I gladly coach people. If you can't afford it, tell me, and you need help, I will help you, right? There's not a person in this room I won't bend over backwards for to help or to help get profitable. I will always introduce new ideas. Why? Because markets change, and you have to go look at new ideas in order to stay fresh and on top of it, and I will always try new things, right? But one thing I can't have, okay, is if I'm leading 20 people or 30 people or whatever the number is, okay, and there's one person, and let's say this one person is a very, very good trader, right? And I go to the room, hey, don't short, it's dangerous, we're going straight up. And the next thing they call out is short. Here's what inevitably happens. Somewhere between 2 and 5 people in the room will go, well, I saw so-and-so shorting, so I decided to short too, right? And it will blow them up. Shorting for many people is highly addictive. Additionally, if we're down 300 points and I go, I'm going long here, right? I can't be corrected at that point, right? You have to have the wherewithal to go, why is he going long? And is he going long on process, yes or no? And I don't always go long on the process in the room. 98% of the time I do, 2% of the time I don't, right? But I am trading multiple accounts, live, funded, profitable accounts, right? And in the heat of battle, especially when we're down 300 points, right? And I'm trying to position my own personal account, my larger accounts, for swings, I can't be questioned on that entry, right? It's totally fine for someone in the room, like let's use the YOLO trade, the Las Vegas trade that I just pulled up. It's totally fine to look at that Las Vegas trade and say, that's not for me. I had several people push back on that Las Vegas trade. If you watch the original video, I said 3 things about that. First of all, don't risk all your accounts. Secondly, it's for fun. See if you can do it. That's all I said. It's for fun. See if you can do it. Okay? Third, what you will discover is if you do that account, what you will discover is you can work a trade back and forth if you have an area you can be successful in. I'm going to give you an example of that. See these, why did I paint this purple? Sorry. I'll change it back to gray. Oh, I guess I didn't get this area up here either, did I? If you give yourself an account that you can play with the market with and interact with the algo, right? If you can, let me move this aside. you will find pretty cool things within that, right? Things that I can't necessarily teach easily, right? But in order to do that, damn, I didn't mean to erase that, but that's okay. Here, this is the other levels I wanted to give today that are key. So from yesterday's low, right? You just want to mark them off on your 15-minute chart. By the way, remember when I said we're in trend down when it's 15 minutes? This is where trend down ended yesterday. And if you wanted to go to work to the long side, that was fine. I usually like a 50-60 retrace off of this. We just didn't get it yesterday. And that's part of life. That's all right. But if you look at 100 of these, 80 of them go 50-60 retraces or more and then give you the lift. Okay, low. I think the high was at the close. Let's see. That was the high. And the afternoon swing low. Whatever. There. Lock. 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 Okay. And I will do this in a coaching session later. But if you'll put a 5-day moving average, which is what this is, on both a 24 and an RTH, okay? Underneath here, you need an impulse move underneath here. That is the nearest point where shorts will become quote unquote easy, okay? When we're above, longs. When we're below, shorts have a lot easier time. And what that means is you'll get extension on shorts below here, okay? And the way you get that is you go in, you put in a simple moving average. Ha! I'm with you, Dan. I agree with that, Ian. And Dan, I love the comment. So if you'll take your chart, go put a simple moving average, put analysis, studies, and I'll go through and do something deeper on this later. But on moving average, simple moving average, settings, 1,950. 1,950 moving average. That is equivalent to a 5-day moving average. Okay? When we're above, dips get bought. When we're below, shorts get accelerated to the downside. The only difference is, obviously, the retrace back up constantly from shorts. You can't just go, I'm just short underneath and I'm just long above. But your extensions to the upside will be further above and your extensions to the downside will be further below. And I'll do something like on this later today. Okay. The last thing I want to talk about in just a second is the disappointment that this is for a lot of people. Okay. So the way I plan my year out is I try to start off with a very strong first quarter. I take some risks to get that done. Okay. Second and third quarter are just scratching, right? Not scratch as in break even, but just stacking the chips. But I don't expect anything exceptional, right? And then in the fourth quarter, I want to take what I've thrown on top of the pile, plus the first part of the year, which I killed it in January this year. I killed it. Or I made my entire year in a month, okay? And I wanted to stack that up again at the end of the year. And I can't do that in this environment because there's simply not enough volatility. VIX, I believe, is sitting at 11. Let's go look. I may be wrong about that. VIX, 12, okay? There's just no volatility. I need a 16 to really do what I want to do, and we've got a 12 right now, okay? That's okay too, right? But I am frustrated, and I feel pressure from two places. So I acknowledge where my pressures come from because they make it easier for me to operate. I need the room to remain profitable, right? Meaning, just because let's say this goes for another 3 weeks, right? It would serve me no good to have 5 people in the room blow up because they had to make their December great, and then January's rocking and rolling, and those 5 people aren't around to make the money, right? Or they're digging out of a hole. Now that would suck, right? I have to surrender my ambition for the fourth quarter because it's just not happening, right? That fourth quarter dream whatever you want to call it, is not happening today. It just isn't this month, right? There's not enough time left to do it, right? Next, right? I know I don't run the room. Okay, open. Hold on one second. Cole. Hey, sweetheart. I'm pretty sure I left the gate open, but can you double check? The pool guy's on his way. Um, um, the last part is trying to keep everyone in line so that they make money consistently, right? It's really a passion of mine, right? This whole part, this whole part of making money, it'd be easier for me just to sit here and trade for myself, make my money, get out and go do other things that I like to do or want to do, right? So I am in it from an ego perspective to see others win, right? That's my end of day reward, right? But here's the deal. I'm not perfect, and neither is anyone else. I have an ego. I have a strong personality. I have strong opinions, and I'm wrong sometimes, right? But I don't think there's anyone in this room that can't say if they had a problem or they needed help that I would not bend over backwards to help them get through their difficult time and get into profitability. I'm passionate about it, right? But I can't have there's one person in the room, everyone knows who it is, who I'm having a power struggle with, right? And at the end of the day, it's my room, and I have to be able to run it in a way where I'm not spending mental capital trying to keep everyone in line. And that's what I'm trying to do. I'm trying to get everyone to a place where they are constantly in line and making money, okay? So I feel bad about it. I'm a nice guy in general, and I've never had what I've had happen in the last couple of days in over a decade of running this room, ever, right? Even if I don't like someone, I don't kick them out of the room, right? And there's been people in this room I do not like, right? And they didn't like me, and they eventually leave. That's what happens. That's okay, right? So at any rate, I will fight for y'all, but certain things have to happen so that everyone has a clear mental game, and the focus on this room is longs. Stand aside when the market's getting slammed. If you can short successfully, I'm happy for you. If you're using processes that are processes other than what's in this room, and there's many people in this room that do that, okay? There are people that are trading things that are not part of my process, okay? I've never told anyone, you got to stop using that process, unless they're just getting killed on it, right? But you can't come in and Shanghai my process with your process, because I have everyone else on the road, and it creates insecurity. And I have a hard enough time I'm ADD and dyslexic. I have a hard enough time staying on point to begin with, right? You can accuse me of two things: being impulsive, right? Being impulsive and strong-headed. That is true. But I'm also open to new ideas. I will listen to anyone's ideas in the room and consider integrating them, right? But the one thing I can't tolerate, this is my bread and butter, right? Meaning the trading is my bread and butter. And I can't have someone get in my head or question me when I'm trying to put on a huge position in the room, right? And I don't put those positions on the screen and go, look at me, I'm the greatest trader in the world. It's my money, right? I'm worried about keeping my money. I'm 53 years old. I have no intention of drawing down at this point in my career, period, right? So I don't post my numbers to make me go, look how great I am, right? And at this point in my career, I don't intend to start over, right? So when I'm taking a big shot and the market's down 300, I have to have all my attention focused on one thing. And that is not the time to come in and go, Simon, do you think you really know what you're doing here? Right now, if someone sees me on tilt and sees me take 100 trades in a row, yeah, please step in. Go, hey, you're on tilt. Or you're emotional, Simon. Take a breather. Many people have said that. I'll point out to number one, because he doesn't mind the criticism, Ian. Ian's texting me and goes, hey, you sound a little on tilt. Bill has said it to me, right? Bill and I have had our challenges together, but I've always worked with anyone for the benefit of them. That's what I want, right? And Peter's come to me and said, hey, man. And Peter said to me yesterday, I'll tell you right now, he goes, hey, man, it sounds like you're not having any fun. And he said that to me the other day. Yesterday, he called me last night. He goes, it sounds like you're not having any fun trading. And I go, you're right. Right? And he suggested I take, a couple of days off and reset. And I'm thinking about how to do that. I definitely will the week of Christmas to New Year's. That's easy. I'll open up the room for you guys, but that's an easy take a breather for a couple of days. Okay? So please give me the grace to try new things, right? And I will not chop someone's head off. Several people said they didn't like the idea of the Las Vegas trade, that it was actually messing with their head, so I took it off. I'll do it on my own. I don't have a problem with that. I don't have a problem with the trade at all. We're open here, so I'm going to slide off. Slide this off. I'll just reference it if I need it later. And what can I say? Like, we haven't gotten to the bottom of the channel since forever yesterday, right? So I don't think, is there any econ this morning, guys? Just going back to the trading real quick. Today's the 13th. Crude oil inventory is all we got. Okay, so yeah, and then we had the Fed, and there's a Fed meeting afterwards, right? Decide if you can trade it or not. Okay, I care for each and every person in this room, right? Like, not like a, in a weird way, in a good way, right? I care for every person in this room in a good way. Okay, but we have to work together, right? We have to work together in order to make things work. That's all there is to it. Okay. If anyone has any questions about that, just let me know. Potential super trap over here. If you're willing to do anything like that, it would be at 31. Again, shorts, take at your own lovely risk, right? This thing's just on a mission from heck. That's a apex trap right there. Again, who knows when they'll actually roll this thing over. It's probably a little optimistic to think they'll do it this morning. Look at NQ versus ES. Look at the difference. Look, 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 look. Wow. Just complete opposites. Well, whenever those floodgates open to the downside, wow. That has to be done without rebalancing thing, right? Like, that's just amazing. Look at this short squeeze. That's something else. Well, there's that. I just don't have a number that I'm looking for up here. Right now, this is what you have to get below. Guys, if you give me just a second, I need to run over to the house real quick, and I'll be right back. Hopefully we wake up here in a minute. You got to get below this. You need a point of control below. That's where your first trap. And for those who are looking for shorts, that's what you have to get below. For longs, you got to get about to the bottom of the fourth channel to start with. And you need to watch that it's not a flip and just nosedive. Don't go on tilt. If you go long and it flips and stops you like that, part of the deal, right, when we've been up for so many days. And that's what the only concern that I have. So, yeah. What else is there to say? You know, we've just been going up every day. You can't blame someone for wanting to go long, but yeah, it's been a challenge. And there's the first attempted break. That's good. You have to go inverse supernova, which means you have to break this. And that's where the stops are sitting, obviously, the tightest stops. Did anyone short that? I don't say anyone should have, just I'm asking. That's on process shorting, right? I'll see what I can do about that, Ian. Boom. About time we found a seller in the house. Still above prior day's high. 16,580 and a quarter. I'll throw that up for several days. Not very much energy on the sell. Look at the size of the rotation on the 24 tick. Right? Like that's not what you call, oh, look, the sellers have showed up. Look at that. You pull that in over days. Like this is the last big significant sell wave we've had right there. This is nowhere close. Oh wait, is that right? Maybe it's bigger than I think it is. It looks so tiny over here. That's about maybe a little bit bigger than this. But it's in this neighborhood that it has to get. Like you'd want to see it big, like really jump. And by the way, the 50-60, just so you're keeping up with it, relevance-wise, well, really you'd have to call that the current swing low. Put you in this neighborhood right there. which amazingly enough puts you at the 382 is right at 16,580.50, which is prior day's high. So expect a little bit of noise there once they get there to try to counter rotate it. And then ES is apparently not even open. It's weird. And by the way, on the short side, I'm fine if you short once you see it rolling up and down, right? Like, there's nothing wrong with it. Just do it on smaller size and be more aggressive on your scales, right? And don't get addicted to it. Make sure that you know, if it starts getting too easy, you're close to the bottom, right? But if you can't do that flip without blowing up, then my suggestion is you don't. I have a hard time with the flip myself. More than that 10-minute window where there's a lot of stops. A lot of volume going off here. Not very much speed. Here's the mid back up. Right now. Pitch at 32 to 40. Oh, and then your opening print. A lot of people would see that as bearish if we got below. That's pretty damn close to 830. We'll use that bar. So this is your opening print. Way below. White. So that's 16,609, right? Would get you below the opening print. And you can see they're trying to hold that opening print. But a close below is generally not considered good. Same thing with getting below, 5-minute bar below the 5-minute open. That's basically an entire retrace of the open run from 08 to 58. You'll just keep dragging that down. Below the opening print, and on a big number too. They push with a lot of volume on that. So your long setup above here, just FYI. They tried to absorb it, and they gave. Bye-bye. Above that, they're trapped, so hypothetically. Pony control above, and it's a long. Again, we're still above prior day's high, so take it with a grain of salt, right? You have to trap back into that high to even start the roll down process. Back to backside test it. And that's also an apex trap to the upside, which I won't be taking. Pony control above. It's 3 minutes until the top of the hour. I'll just wait till they get done doing what they're doing. And that's not an enormous push. It's a good push down. It's just not enormous. That pony control will land above, and that should land you up into the 50-60 if they get buyers. That's how you measure, are things working the way they should be working? You should be able to tag at least that 382 to 50-60. And 10 seconds till 10 o'clock. Oh, 9 o'clock, excuse me, Central Time. There we are. See how they couldn't get a point of control above? view that pointing control above. Now, technically you could have taken the pink bar, but again, I'm not aggressive up here at this point. Wow, just silent, silent, silent. No one's really negotiating here. They're absorbing the selling. They're trying. But man. Absorption. It's absorbing till it's not. Pretty good fight. Oh, they're pushing now. Again, it's so slow for 9 o'clock in the morning for me that if you want to take the trade, just take it on your regular process with your stop in place, right? That's the best I can suggest in this case. It just should have sprung off of that with a fury. It shouldn't, in my eyes, it shouldn't be this. They got it. Should get a lift out of that. This is the target up. And the indexes are still positive, by the way. into the 382 retrace. If you took the long, you got paid. Again, Fed day, I can wait to see a stretch or something important for me. I'm not going to keep trying to grab the high after so many days up. I'll just wait till we get some kind of corrective move. Intraday. And remember, the pattern's been straight down, straight up, right? I guess I should have taken that long. That is okay. Up we go. Wow. Nothing to say about that. Nothing good, at least. It did go back to the 50-60. I just wish we had some speed. That's all. I'm missing that element badly. And no indication of exhaustion to the upside. Anyone take the long? I should have done it and I didn't. The pace is non-existent is the problem, Ian. I agree with you on that. Still, it was the right. The algo said to go long, and I didn't. So, there's that. Pink bar up. I mean, when you can't even get a retest of the prior day's high after that run, that's pretty jaw dropping. Also, remember we have OPEX Friday, just to make it more fun. I mean, how many options traders are out of position? That's the other question. I have no way of answering that question, but that is a good question. Well, the algos nailed the terms on that, interestingly enough. So ideally, all you have to do is wait for the next algo to print. It's good to see them responding off of it, right? So you just wait for the next algo to print and take your trade. Man, this used to be Globex. And the push continues towards 62 retrace. And again, we have not even remotely flipped negative. We're at 57 points, right? So just keep that in mind. Remember, every day at 10:30, we've gotten that buy program that's gone up. Like those fighting the short side of this are just having an immensely difficult time. And those of us who are waiting for it to push down are having an immensely difficult time, right? The other side of the story. And you feel dumb for not taking the trades and just writing them. At least I do. You have to get below 25 to roll lower. Not point of control. No algo showed up, but that's the number. Oh, you know what I didn't do? That's correct. Oh, there it is. I was like, an algo should have shown up there. Because it's this right here. That's right. Well, guys, I don't know what's wrong with the market, but we're right back to this whole straight up, straight down thing. That's all right. It happened the last rollover, and it's OPEX related as well. So, and then you also have that rollover in the NQ index, the rebalancing. So, whatever it is, they don't want to let it go down. So, I'm okay with that. But it sure sucks not to get the speed like that. Just no rotations down, no backside test. Like, it's incredibly difficult trading when you're talking about straight up, straight down trading. That's just the hardest test of a day trader skill. You pretty much have to be perfect on your entries, your exits, and your nerve control. That doesn't describe me really. So, guys on YouTube, I don't have much to offer because it's Fed Day. Um, we had the long, we had the short, and I didn't take either one, but that's all right. As soon as I see some speed jump in the market, I'll be nailing these trades. But I've got to be able to recognize it. I appreciate you joining me. If you like the video, if you'd hit the like button, apparently that helps with the algo. I don't know much beyond that. And now you're about to trigger below on a short here. If it triggers, again, it's Fed Day, so don't. You need a point of control underneath here, and that would trigger you with a 17-point stop, 16-point stop for a roll to the downside. Anyways, you got to get the point of control underneath. You don't have it yet. I will talk to everyone later on YouTube. Thank you, guys.